Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of SoundHound AI, ticker symbol SOUN, which closed on Friday, April 4th at a price of $7.32, being down nearly 12% on the day and continuing down by about 1.5%, closing the after hours session at around $7.20. So yeah, I wanted to dive into the chart, talk about the moving averages, some levels that stand out to me, maybe look at some fib retracements, and also wanted to dive into a little bit of options data from unusual whales just to give an idea if we have found a bottom. Because, if we do look at the chart over here closing around $7 a share, the last time we saw prices at these levels was back in November. So, big question, is this a dip buying opportunity? Or is this going to continue lower? But before I throw up the moving averages and the drawings that I have, I did want to point out one thing that has stood out to me. It might stand out to you guys just looking at the chart here. But what we have been forming is lower lows in the stock price. You can clearly see there. Hit a low of sub $7, a low of $6.75 on Friday, April 4th. So yeah, that is not necessarily looking so good there. However, if we look at the RSI, we can see that based on these two dates, so this low from February 25th, the RSI was at 29.55, whereas on Friday, so just a couple days ago, on the 4th, I am recording this on Sunday, we saw an RSI of 33.61. So still above 30, whereas over here, it just dipped barely below 30. And so those higher lows in the RSI against those lower lows in the stock price, that is bullish divergence that could be suggesting that a bottom is in or near. Also did want to point out with the volume here, volume was pretty high on this gap down day. It looks like we gapped down on Valentine's Day. February 14th came down over 28% on the day and have just been consolidating to the downside from there, and volume hasn't really been that high as we have been going lower. So maybe that does suggest that there are no more sellers down here. We just need to see some buyers stepping in. And then also looking at the MACD kind of reflects the same type of thing with this big negative here, very red there right in front of Ed's face, and then we do see green being positive here. And now we're really just being kind of flat. So is this going to flip back and be green? Bottom is in, or is it going to flip back and be red? So I also wanted to point out that I do have an alert here that did go off. It looks like I adjusted it to $6.75, but I believe I had an alert at $8, had talked about that level before, and also $7. And so, I think that we could be seeing some very nice dip buys around $7, and that is where we are trading at. But before I get into the drawings, let's quickly look over at the moving averages. We can see that we are below all of them, and I'll just go through them real quick. Here we got the 50-day moving average in yellow. That's around $11 a share. In pink, we have the 21-day moving average. That's right around $9. And then the 200-day moving average is at a price of $8.69, being notably above where current price is. And so I suspect that we will be seeing some resistance around $8.69. But if we can break above that and hold it and close above it, I think that would be suggesting some strength, reclaiming these levels and then moving to the upside. Just like when we hit the 200-day moving average over here on March 10th and 11th, we bounced, but couldn't really hold above the 21-day moving average. Got rejected. Now we're below all. So let's see us reclaim some of those levels. But anyways, I'm just going to clear that off and throw up the drawings here because there are some levels that I'm pretty excited about that I wanted to talk about. And so I did mention the gap up here at $15.25. That was the closing price on February 13th. And so that is, a potential target, but might be some resistance there. So be careful of that. That is over a 100% move to the upside from current price. So a very nice move there. But a level that I think would act as resistance prior to getting up there is going to be this purple line here. And that would be about a 40% move to the upside. And that is at a price of $10.25, or really just around $10, being kind of a psychological level, moving into the double digits. That might be acting as some resistance. Also, with all of this consolidation here, anybody who is buying here with it dipping down here, they might want to be trimming or selling at break even, regretting having bought back here with this dip that we have just seen. But I think that we could be coming into support. As you can see, I do have this yellow line here, kind of like a caution, because I think it could go lower, but it could be, getting into the green where, a good time to be buying. And so this yellow uptrend is based on the low from February 6th of 2024, and that looks like it was at a price of $1.62. And then the other pivot point was on August 5th of 2024, when markets gapped down, a pretty historic day in the market as far as I'm concerned. And so I think that those are two pretty important pivot points. We did hold that uptrend as support more or less over here. It looks like ranging between September and November. We were holding that as support before we broke out to see a high of around $25 a share. And following the last test of that yellow line, we went up. Let's see, 381%. So that's a very nice move if you ask me. And, we have retraced now back to that level. So maybe it will be acting as support again, and maybe we could be seeing, an upside move, which if we did get back to those all-time highs, that would only be about a 240% move to the upside. As this is an uptrend, we have retraced to a higher level. But also a level I have not talked about is this red line here. That is at, I believe, 814 there. That is a 146% or so move to the upside. So another potential target there. And so just taking a step back, where do these levels originate from? I have talked about this purple line in the past. That is based on the high from Pi Day from 2024. The high was at 1025. And from that, I was thinking maybe we're forming, a little bit of a cup and handle here. And then from that breakout, got a very nice move to the upside. So that was just, a beautiful level. Was hoping it'd hold as support here, but unfortunately we did dip lower. But that could, just be representing great opportunities. And then prior to getting to this all-time high of 25.98, which was hit on December 26th, the day after Christmas, hit an all-time high at 24.98. Looking good there. But prior to that all-time high, or prior to getting to new all-time highs over here, the all-time high was previously 1814. So, I was expecting that to be some resistance, might be acting as resistance again. So we do have all of these levels to the upside that we might want to be cautious of. If we get back to them, might be good levels to trim at. Be prepared for some rejections, whether that's around $10, around $15, $18, or $25. And actually what I should probably do is adjust this color to orange, so kind of getting into nearing that red territory, that red zone of wanting to exit positions. But then 24.95, I'm just going to make that thick and make that red because that might be, another level to be considering taking profits, or maybe around 22.23 where we see this consolidation over here. And actually, I'll just leave it. Now, I think it's probably good to have that marked. I'm going to do it based on the open price from December 23rd, just because it seems like going back in time, or to this level, we do have, or back in time, a few days from December 23rd. We do have a number of wicks up to that level, so that might be a good level to trim at or exit at in case we don't get back to 24.98. And so what I might actually do, let's see, I will change that to be light blue because, that's getting into new territory. Who knows? But coming back to the opening price from December 23rd, that was at 22.70. And so I am just going to make that line thick and red because, if we don't get up to 24.98, 22.70 might be a good level to, exit at, take some profits, or, let's say, establishing a large position around 7, getting up to, let's see, around 22.70, that would be a 200% move to the upside, and a 100% would be right around that gap fill. So, these might be some nice levels to, let's say, if you have an average share price of around 732, getting up to that gap fill, 100% to the upside, maybe take half off the table, so only playing with house money, and then maybe take in another quarter of that, remaining position, half a position, half of the remaining position or a quarter of the initial position, take that off the table at 200%. And so then you just be able to hold on to that remaining quarter of a position to just see it ride. So, I find that to be kind of a compelling strategy with SoundHound, but maybe, it doesn't get up to these levels. Maybe it actually gets rejected from prior to getting into filling this gap here. And that would be around $11.50 or maybe $12 a share. I think that's referred to as the gap window, the highs before starting to fill it. So maybe $11.50 to $12 might be some resistance there, or maybe not quite filling the gap entirely, maybe just coming up to around $14 a share. And so those levels, let's see, from current price, that would represent about a 50 to, let's see, around 100% move to the upside. So yeah, I think that these levels might be kind of nice guides, but they also, may not get hit. So good to have a plan for that. And also, before I forget, I wanted to talk about this green downtrend, which is based on the prior all-time high. That was hit, I guess, on May 3rd of 2023. That was at a price of, let's see, 18.14, and then coming back to this high of 10.25. That was hit on Pi Day of last year. So with that downtrend, maybe that is like, the last line of defense if the stock price does continue lower, and that could be seen come down to around $6 to maybe $5 a share. Let's see the intersection. I'm just going to put a line up right around here. That's around 540, 550, somewhere around there. So always the possibility that this does bleed lower. So good to have a plan for that. But, if it does come down to those levels, let's see, that would be around the middle of May. If it's around 550, I think that actually potentially be at a very good level of support. So good to keep that in mind. And then I also wanted to do a Fibonacci retracement going from what looks like the all-time low at 93 cents that was hit over here on December 22nd of 2022, then going up to that high of 24.93. So let's look at that. I'm just going to try and get that lined up, 93 cents there. And then we have, let's see if I got that lined up right, 24, dang it, 69, that number haunts me. Okay, so 24.98, got that marked there, and I'm actually just going to move it over to there. Yep, so we got that retracement there, and I'm just going to add up some levels that might be standing out as potential support. And so the 382, well below that, so I don't think we need to be paying attention to that one, but I'll just put up the 618 as well as the 786 to see if those are going to be potentially acting as support. And so the 618 corresponded very nicely with 1025, that purple line, the pivot high from Pi Day 2024. Unfortunately, we effectively just formed a bear flag there before breaking down, big downside move here, and really, downside move, consolidation, downside move, consolidation. maybe we start to form a bottom very, very soon. But maybe this is going to come a little bit lower because you might be able to see it there, the 786. I'm actually just going to remove that 618 because I don't think that is an important one to be paying attention to. But that 786, that is at a price of $6.08. And that would correspond with further downside. The low, as I had mentioned, that we hit on Friday was $6.75. So coming down a little bit more to around $6, that would represent further downside of about 16% or so. And so maybe we get some more wicks below this yellow uptrend, some fake out breaks below it, maybe some closes below it, with people, expecting this to just like free fall, but then for maybe, around $6 to catch it as support, and for, people also to be expecting that this green downtrend to be acting as support, a dip at around 550, 540, like I was talking about. Maybe that doesn't happen. Maybe we don't even come down to 6. Maybe just above it at 608. That could be a really nice dip buy. And then looking at that level, moving to the upside, the gap fill would be about 146% to the upside, and 100% move from there would be getting to around $12.50. So getting into that gap, but not filling it. So that seems like a compelling, very nice trade there. And then getting back to the all-time highs, that'd be a 300% move to the upside. So pretty excessive there, getting to that red line 265. And the orange level, or just above it, would be right around 200% move to the upside from around 608. So looking very nice there. So lots of levels. Whether we do go to the downside, there is some potential support down there. So I think that we could just be seeing some very nice dip buys dip buying opportunities over the next month or so. But if we do hold this yellow trend line as support, I think that history may be repeating, and we could be finding some very nice upside, whether it's, like we saw over here. Let's see, that was over 300%, over 400% move to the upside. And actually, let's just adjust this to the last time we tested, almost 400% to the upside. Or looking back to when we initially started to form that uptrend, that was, over 400% to the upside, a smaller move, but relatively a larger move there. So, we're back at historical support, but there could be further downside, so do be prepared for that. And then I also wanted to talk about a little bit of the data from Unusual Whales, looking at SoundHound AI. So this is the net call and put premium, as well as the stock price in yellow, and then also the volume for these contracts. And so this is just for Friday, April 4th, and what we can see is that the stock price did dip down, but then it closed higher. It actually did, as you can see, closed red on the day, so did close lower than where it opened at, but we did get a nice wick to the downside that did pierce that yellow uptrend, so maybe that's like a bottoming tail, although we closed right around the 50% mark of trading for that day, so it's not necessarily a bottoming tail because we will want to see a close in the upper quarter of the trading for the day, so that is another reason why I could see some further downside. So good to be cautious of that, but generally, I like that there's a big wick to the downside and then a close higher up at around that 50% mark. And so looking at the data here, we can see net call premium in green going up. So that is good, suggests the buying of calls, the net buying of calls, people going long. And with that, with the switch from being a little bit negative at the beginning of the day, where the green line was below this line right here where the cursor is, that was the 0 mark, so over here. That prior to that, we actually saw red in the volume net selling, but then that did switch over to being green with that volume. And so that makes me think that the calls are looking pretty strong. Whereas if we look at the net put premium in red, we did see that actually initially being up on the day. And then that did start to pull back and actually ended the day more or less at zero, at that zero line there going across. And so what we can see is that net call premium increased by $566,000, whereas net put premium actually increased by about $1,000. So, really a very big difference there that does suggest that, bulls are betting on this going up. And if we do look at the bear bull slider there, 49% being the majority in favor of the bulls as far as this data looking bullish. But that's not over 50%. That is, of course, because of that neutral zone there. But definitely the bullish 3.2 million there, 3.25 million versus 2.68 million on the bearish side. So I think that this is looking pretty good. And if we do take a step back just to the past 7 days, what we can see is that this is the most net call premium traded going up the past 7 trading days. We do see a pretty close day back here on March 28th. And on that day, net call premium ended at 558,000. But what we also saw on that day was net put premium going down by $1.8 million. See the big drop in the net put premium there. So that did look like potentially bottoming signals that what I would think this is bears getting out of their puts because they think that bottom could be formed soon or be beginning to form. So not really much more benefit in betting on this going lower if the stock price does effectively stay kind of flat. Although it did go lower, but we just see net call premium increasing. And then if we take an even further step back, looking at the past 30 days, what we can see here is we did have, going back exactly 30 days. So on, February 24th, we saw a net put premium increase of $7.7 million. So that seemed pretty bearish. Stock price following that did go up, but ultimately it did come lower. In yellow there, you can see it being lower over here around March 10th and 11th. And then now it's, as low as it has ever been in this 30-day time frame. And so let's see, and looking at call premium, net call premium going up the last time, we saw it especially high, notably higher than what it was on Friday, April 4th, was looking like on March 7th. We saw net call premium go up by $2.82 million, so a very large amount of money going in there. And we did see a nice rally following that. However, price has come down lower. And so price is as low as it has ever been. And what we're starting to see is net call premium increasing while net put premium, after having dropped down very low here, has effectively stayed flat. And so that makes me think that, looking over the past 30 trading days, this seems like it's the best time to be going long with SoundHound because the stock price is at the best discount, and we are starting to see some bullish looks in the net call premium as well as the net put premium. So that could be suggesting that big upside is coming, and we are back at this level that has corresponded with big upside following a retest of it. So I think that SoundHound is at a great level to be picking up some shares, but I think it will be at an even better level if we see it come down into the sixes, maybe getting down to 6.08, maybe testing $6. I doubt it will be coming to 540, 550 or so, but maybe it does. And, I think that would still just be corresponding with some very nice dip buying levels. So, I'm feeling good about it. I am not panicked. And I do think that there still is a lot of upside potential with SoundHound, maybe not getting back to 24.98. But I do think that, even just getting up to that gap fill, that's over a 2x, over a 100% move to the upside. So I feel like that is just a really nice trade there. And if we do end up going lower, the downside risk is, 25%, let's say, if it comes down to 550. So, a little bit of a risk there, but good to have a plan for if it does go lower. And so, yeah, I'm excited about it, but as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys, and have a great Sunday. Cheers.